I've got Scott Minerd.
Uh-oh.
Right? He thinks you're going to get a near-term pullback. Why do you say uh-oh? You should be ready for this. Tony Dwyer thinks we could go down 10%. Jonathan Krinsky says we could go down to 39.50 on the S&P. Rick Reeder says the market's overheating and frothy. And I look at what you're doing in your portfolio. You sold Target, you trimmed Apple, you trimmed Walmart, you trimmed Blackstone, KKR, and Bank of America. If that doesn't say cautious, I don't know what does.
Well, it does. Scott, so good to be back with all of you guys. I've missed you. You know, it's kind of interesting. So as you know, Scott, at Loop Capital Markets, we cover institutional investors, large and small. And a lot of the trends that we saw, in particular on our equity desk over the past couple of weeks, was the supposed smart money, and I do believe our clients are smart, by the way, has been trimming, right? When you think about where we were a year to 13 months ago, we were at substantial lows. I mean, when you look at a target, and I want to be very, very clear on what I did with my portfolio, I wanted to hedge my risk just a hair at this point in the market, right? So I do believe in Target. It's one of the places that, candidly, if this thing dips down a few more bucks here, I'll jump back in because I believe in the long-term story of Target. I believe in the leadership of that company, and I believe in how they've pivoted. But I was up over 100% in a value name, right? I think it was just time for me to take a little of money off the table. The same thing for those other companies. I want to, again, be clear to the audience that I believe when I bought them, and I believe today in the management companies, in the strategies of all the companies that I trimmed, and I'm still in many of them. When you look at a Blackstone, when you look at a Bank of America, a Citibank, Walmart, for example, those are names that are long-term names you can keep in your portfolio. And I trimmed them just simply because of the amount of return that I received on those names. And I wanted to hedge my long-term portfolio risk, which I am prudent, I am cautious, but I am still optimistic on this market.
I got you. You know, Josh, part of the problem here is that you've had a lot of stocks in a lot of sectors go up a lot. So like Courtney, there are others who are sitting on big winners and thinking that, OK, maybe it is time to be a little cautious for the near term. I've got names and, you know, I'm talking across the growth and value space over the last 6 months. Your CrowdStrike, for example, is up 64% in that period. Some of the gains are double that, close to that across the board. Snap, Palo Alto, Etsy, Square, you know, Plug Power, DraftKings up huge. Then you've got some of the value reopen trades like the airlines over the last 6 months, which are up a lot, the banks, the casinos, et cetera. What are you going to buy if so many things are up so much?
Well, I mean, I can give you a whole list of things that are, you know, 10 or 15% off their highs. So, like, that's a great list that you just reeled out. But there's a contra to that. I can show you any market cap size you want, any sector you want. So I think there is enough dispersion for you to be able to find opportunities. But I would just say one of the big – look, I talk to young investors all over the country. One of the biggest mistakes that I see people making is thinking that they always have to have a new trade, or thinking that they always have to have a new idea, or that, like, taking action in their portfolio every day is, like, going to help them in some way, shape, or form. It might be fun, but that's not actually what you need to be doing as an investor. I think there's absolutely nothing wrong with being in your winning stocks and not just selling them because they went up a lot, or even worse, because they just had a bad week or two. So a lot of the same things, Scott, on that list that you just named have been working for a long time, longer than 6 months even. So I just look at the market overall, and I see that every day there's a new leadership group. Today it's retailers. Take a look at Gap Stores, GPS, Stealth, right? But breaking out to a new 52-week high. Kanye collection coming out, a lot of exciting things. New CEO there, took over, came over from Old Navy, where she rescued that brand. That stock continues to work. It's been working for more than a year. Macy's is now breaking out, Dick's. But today, they're really exciting. So today, like, that is, I think that is what you want to avoid doing. Like, what's the strongest stocks today? Let me get really involved in those. I just think you want to be diversified, and you want to understand that on any given day, you might be envious of another space, another stock, another sector.
Sure.
But stick with your winners, and they continue to work. Look at Microsoft, new all-time high today.